Yeah, good morning, all my dear students at Government First Year College, Gauri Vidur, Section A and Section B, First Year bcom, NEP, Syllabus 2022 and 23 batch. Let me make it very clear. I have already written here, okay, note what I expect from all the students, 100% results, right? So it is possible because the teachers are assisting you, right? In many ways, right? Online, offline, even in the group, everything. This is the duty of the students to equip yourself and see to that good percentage is being received. Let me make it very clear. If you are performing better in the examination, that indicates that you are career oriented. Once you go for the placement, right, or the work, they ask you your credentials. The percentile that you have scored in the marks card always correlates with your efficiency. That is the intention, to know how the seriousness, to measure the seriousness of the students while performing in the classes, right? Regular course of action. So to get the inputs, so they would be asking all these questions and credentials they would ask you to show. So hence, before exams itself, I am warning. Let every student be preparing seriously. Prepare notes, read, have, because the previous day I have uploaded one video. You could see it once again, watch it, no problem. No problem, right? So prepare accordingly. Let me not take too much of time. This is one more video presentation. As someone was asking, sir, do we require this hire purchase revision class? What revision? See, there is hire purchaser, there is hire vendor. Hire purchaser, many sums we have done. Similarly, for every sum, you do one thing in the books of hire purchaser, in the books of hire vendor. In the books of hire purchaser, asset account. Correct? Then hire vendors account. Depreciation account. Correct? Interest account and depreciation account. Then in the books of hire vendors, hire purchasers account and interest account. Simple. And write the journal entries, keep separately, for example, in the books of hire purchaser. The first entry, you will not write once you acquire asset. But the second entry, you will write while you make the down payment. Suppose your asset, purchasing asset. So asset account data to bank account. When is the date? Beginning of the contract. Hire purchase system, correct? Hire purchase contract. Then end of first year, what becomes due? First year installment. Asset account data, okay? Interest account data to hire vendor account. Same day, first year ending, you make the payment of first year installment. Hire vendors account data to bank account. Same day, you'll be charging the depreciation, correct? Depreciation account data to asset account. Same day, interest and depreciation will be transferred to profit and loss account. Profit and loss account data to interest account to depreciation. First year done. Second year, same, but you will not write the first entry. Asset account data to bank account, you will not write for the second year. You will be writing for the second year that asset account data, interest account data to hire vendors account data to bank account, depreciation account data to asset account, profit and loss account data to interest to depreciation. That's it. Similarly, third year and fourth year, if it follows the same. Correct? In the books of hire vendors, it is the sales. Hire purchasers account data to sales account. Cash price will be recorded. Correct? First year ending is not interested in the principal amount, but is interested in interest. Interest account data to hire purchasers account, first year ending. Correct? First year ending, he receives the first year installment, right? Bank account data to hire purchasers account. Same first year ending, interest is received, that is income to him, correct? No? So this income first debited, now it is to be credited, correct? So interest account data to profit and loss account, simple. This interest will be transferred to profit and loss account. First year over. Second year, you don't receive down payment again, no. Second year interest becomes due. Interest account data to hire purchasers account. You will receive the second year installment. Bank account data to hire purchasers account. Correct. This interest will be transferred to profit and loss account. Correct. So interest account data to profit and loss account. Simple. Third year, fourth year, same follows. That's it. Dates are important. Correct. Down payment only being made at the beginning of the particular year. Okay. That is the agreement. All these things become very important. And my previous videos I've already shared. So please go through. Now let us see. So what is very important while listening the class? Don't just listen. Make the note of it. It's very important. So this is the illustration number 19, already repeated, I think. So for the purpose of revision, let me share here this one. And apart from this, if there are any other queries relating to this particular chapter, hire purchase system, so please update there on feedback. Once you send the feedback, then I would know, okay, what is missing, right? So yes, a minibus is purchased for 1,60,000. This is cash price, right? Cash price of the minibus. On 1/19/95, the amount payable was 40,000 rupees down payment. Okay. So 1,60,000 minus 40, yes, 1,20,000 balance, correct? So I would write K. K means 1,000. 1,20,000 balance, correct? No? How many installments? 3 installments of 50,000 rupees each. 3 into 50,000. So 50,000. How much it becomes? 1,50,000. Correct now. So how much principal amount? 1,20,000. How much you are making the payment? 1,50,000. Is it more or less? More. How much more? 30,000 more. This 30,000 is what? Total interest for 3 years. Correct now. So that means this 50,000 is inclusive of interest, principal and interest, correct? No? At the end of the year, depreciation is charged at 10% on written down value method, reducing balance method. Show the necessary ledger accounts in the books of the purchaser under asset accrual method. Very simple. Okay. If you have understood this becomes very easy. Correct. See here, total interest 40,000 plus 1,50,000, 3 installments, 1,90,000. This is what? Hire purchase price. Okay. So hire total interest, total amount, that is hire purchase price minus cash price, 30,000. Correct. 1,90,000 minus 1,60,000. Now calculation of amount due at the beginning of first year, second year, third year. So first year, how many installments due? 3 installments, 1,50,000. 2 installment, second year. 1 installment last year, beginning. Okay. Simple. So here first year, 1,90,000 minus 40,000. So 1,50,000. 1,50,000 minus 50. 1,00,000 minus 50. This is how 3:2:1. That is a ratio. So in 50,000 rupees, first year installment, how much is interest? 15,000. Then what is the cash price? 35,000. Here second year, interest is 10,000. Installment is 50,000. Balance is 40,000 is cash price. So last year, 45,000. Got it? Now depreciation. Okay. So 1,60,000. First year 16,000. Second year 14,400. Third year 12,960. Balance to be 1,16,000. 6 point. Okay. Now? So what is the cash price? See, cash price, installment minus interest. This is cash price. First, second, third. Simple. 35, 40, 45. Got it now? Yes. Minibus account. So see, first year beginning to bank. This is the down payment. First year ending 31st December 1995 to hire vendor. First installments cash price 35,000. Same day 31st December 1995. By depreciation first year, 16,000. Balance carried down, 59,000. Okay, total both the sides. Next year, two balance brought down, 1996, 1st January. 31st December, to hire vendor. Second year installment, cash price. By depreciation, second year depreciation. By balance carried down, 99, 84,600. 84,600, third year beginning. Two balance brought down. Correct? Then here, print mistake. It is not to bank. Hire vendor. This is hire vendor. Okay, that is a print mistake. Okay. Third year installment. By depreciation at 12,960. So 1,16,640. This amount and here this amount. Both are one and the same, equal. Correct? This is done. Hire vendor's account by first year ending. Okay. This is cash price 35,000. By interest first year 15,000. To bank account 50,000. This is first year, second year, third year. First year, second year, third year. Over. Now interest account. First year, second year, third year. To hire vendor by profit and loss account. First year, second year, third year. Depreciation. Depreciation always charged to asset. Here, what is the asset? Minibus. First year, second year, third year. First year, second year, third year. By profit and loss account. Okay. Thank you so much for watching this particular video. If there are any other doubts, please put it in the comment. Okay, YouTube itself, you can comment that or send me the feedback. Sending feedback is compulsory. Once you send the feedback, both the sections together, 200 students, 200 feedbacks I need to receive, right? So please ensure that you send me the feedback without fail. Okay, homework, you do it. I won't be suggesting. Okay, thank you. One.